So today we take a look at the stock of Atossa Therapeutics and why this biotech stock in particular is taking off. Atossa is a biotech company focusing on breast cancer therapies that prevent the recurrence in patients that have had either chemo, surgery, radiation, or a combination of these. Now, full disclosure, I do not own any Atossa stock is what I was going to say, but I had to redo this video because I saw a huge pullback today and I knew I could get in on it cheaply. So what happened is I was still doing my own due diligence on the company, and while doing so, the stock just took off. So I basically missed out on that. However, when I completed my due diligence and it indicated a very strong outlook, I decided to wait for a pullback, and it came much earlier than expected. With that said, the biotech market as a whole is just absolutely on fire right now, and it's almost hard to not pick a winner. These are the biotech stocks that I have on my watch list, and all are doing very well. Luckily, I did get in early on BioTech, so seeing some very nice profits from that. Not yet invested in the other ones, but I will explain in a later video why I bought a large number of shares in Cerabane. Now let's dive into the rise and future outlook of Atossa Therapeutics. So why even look at Atossa? Now, Atossa Therapeutics came to my attention on February 1st when I saw it going up after the January 25th pullback, which for me was more hype driven than fundamental changes, since the stock shoots up 59.3% in one day and then crashes, losing 25.5%, making for a net gain of 18.7%. The actual catalyst that you want to focus on was on January 29th when the warrants finally got exercised and the company receives $21 million in cash resources. Now, this cash injection is very important for two reasons. One, Atossa had serious cash flow problems in the past and was burning through its reserves at above market speeds. And two, this means that an institutional investor that already has a significant stake in the company and access to more privileged information is now investing even more. So at this point, we are looking at a cash-rich company with a rising share price, but we need more fundamentals in order to justify investing in Atossa. This is where Endoxifen comes in. Before we continue with the crucial element, please like and subscribe to the channel for more finance and banking information. Now, Atossa Therapeutics currently develops multiple therapies, but their real star is Endoxifen. From the start, Endoxifen has been engineered to replace tamoxifen, also known by its brand name Nolvadex. To understand why this new therapy is revolutionary and could set up the company for great success, we have to dive into the medical literature. Now, technically, Endoxifen is the active component of tamoxifen, so naming the new therapy Endoxifen makes everything a bit confusing. Both Endoxifen and tamoxifen are prescribed for preventing the recurrence of breast cancer after a patient has had chemo, surgery, or radiation. Now, tamoxifen must be metabolized by the liver to produce active components in the body. However, many patients don't metabolize enough to receive significant benefits. Here's where the innovative part of Endoxifen comes in, because it will deliver the active component, Endoxifen, great name choice by the way, directly to the body, so there is no need for the liver to metabolize it. The phase 1 trials showed that Endoxifen reached a steady state in 7 days, where it takes tamoxifen 120 days. So now we have a cash-rich company with a revolutionary drug that is showing great promise, and all we have to do now is take a look at the financials to make sure that everything is set up for success. Atossa's financial results. When we look at the finances of a biotech company, we have to proceed a bit differently than with a more traditional business model like a manufacturing company. Biotech companies will spend a lot of money with no revenue coming in for a long time. Revenues usually don't come in until the product is finally brought to market, while most manufacturing companies can begin seeing revenue streams quite quickly. Now, after a period of cash flow problems, Atossa Therapeutics seems to have a handle on its finances. In the first 3 quarters of 2019, it was running a $14.6 million loss, and in the first 3 quarters of 2020, it had a $10.3 million loss. Given the recent $21 million cash injection, we know that Atossa can easily survive for the next 2 years even if it would still be running a small loss. Any investor would only take on this type of risk if there was a huge upside to it, and this is where the market for tamoxifen comes in. Rough estimates put the global sales for just tamoxifen between $700 million and $1.2 billion in the coming years. Given that Endoxifen is expected to outperform tamoxifen with more effectiveness and less side effects, it would be logical to assume that it will be taking market share away from tamoxifen and also from other breast cancer therapies. Catalyst for the stock rise. Based on all the information we have so far, it becomes clear that if Atossa can get Endoxifen to market with assumed effectiveness, safety, and reduction in side effects, it will easily bring in a lot of revenue and finally make the company profitable. This brings us to February 2nd of 2021, when Atossa Therapeutics announced it was halting its open-label phase 2 clinical trial in Australia. The results from the trial were so good that the company is now fast-tracking its Endoxifen program program in the US. The most incredible result from this trial is the possibility of using endoxifen as a replacement for chemotherapy and even surgery. This will dramatically increase demand. Next to this, endoxifen could potentially be used to replace aromatase inhibitors used in other therapies, and if so, this would all open the door for endoxifen to the global breast cancer therapy market, which is estimated to be worth between $20 and $35 billion in the coming years. So knowing all of this, the news obviously sent the stock skyrocketing on the 2nd of February, reaching a high of $2.92 for more than a 23.2% gain. The very next day, Atossa released a status update of an endoxifen treatment that started 2 years ago and that the patient had no recurrence of breast cancer. This day, the stock rose even higher, closing at $3.24 for a 15.7% increase. A small side note though, this treatment was done only on one patient and the usual time frame for measuring success is 5 years, so this means we can't make any assumptions based on this result. On February 4th, the stock rose even higher. I guess the information was now processed by major investors in the market, allowing it to trade at $4.58 for a total of 41.4% increase. Since I was focusing on the NEO stock analysis during these 2 days, which you should definitely check out if you have not already, I will link it here in the corner, I could not react to the rapid price increase. However, like I mentioned in the intro, there was an almost 12% pullback during Friday's trading session. I'm guessing that many earlier investors collected on their 100% gains, and this allowed me to acquire a stake in the company at a more favorable price. This all brings us to the question of what should you do right now? The future outlook of the share price. If you're thinking about investing in Atossa Therapeutics, you're probably wondering whether you should buy and sell for a quick 30 to 40% increase in the next couple of weeks, or hold for 1 to 2 years when the therapy hits the market, and then the sales will start to come in. There's even a third option, and that is to hold on to the stock for at least 5 to 10 years. Now, since I am a value-based investor looking for high growth in the long term, I am definitely going to hold on for at least until endoxifen hits the markets and the company starts generating significant revenue. With that said, I completely understand you want to trade this stock for a major short-term gain because investing in biotech is a risky business with much uncertainty. However, I would like to make the case that as it currently stands, you are looking at a new breast cancer therapy that will be more effective at preventing breast cancer, cause less side effects to the patient, could potentially replace chemotherapy and surgery for certain patients, and has access to a global market of $20 to $35 billion. Considering all of this, you are looking at a bright future for Atossa Therapeutics in the next 2 years. Now, if the company manages to bring the therapy to market quickly with proper sales and marketing, I would hold on to the stock even after sales start flooding in. This was the analysis of the Atossa stock. Please like and subscribe to the channel for more finance and banking information.